Welcome to the deep dive. Today, we're tackling something pretty central in finance right now, how the U.S. is figuring out cryptocurrency regulation.
Yeah, it's a hot topic.
We've got some insights from the recent SEC Speaks event, and looking at what the commissioner said, well, it's obvious there's a real disagreement happening internally.
A fundamental one.
Exactly. So our mission today is, get under the surface, understand these different views inside the SEC, and really explore what this regulatory tension might mean for crypto's future and, well, its connection to traditional finance.
And what really stands out immediately is just how far apart the thinking is at the very top. It's not minor stuff. It's a basic philosophical split on how you even approach this new kind of asset. So for you, trying to figure out where things might be headed, getting a grip on this internal conflict is, it's crucial.
Okay, right. So let's dive into Commissioner Caroline Crenshaw's perspective first. She's a really striking image. So the SEC's current approach is like playing regulatory Jenga. That definitely makes you stop and think.
It really does.
Yeah.
It's a very effective way to picture her concern, right? Imagine market stability as that Jenga tower, built carefully with rules, precedents. Commissioner Crenshaw is basically saying she's worried the SEC with crypto is sort of pulling out those vital blocks.
Right.
Which, could make the whole thing unstable, potentially collapse.
Right.
Her main point is that the SEC seems to be backing away from applying its established rules consistently when it comes to crypto.
And how she sees these blocks being pulled out is important too, isn't it? Not through the usual formal rule changes, but more like through staff guidance, sort of shifting the ground rules without a big public discussion.
Precisely. And she's quite critical of that. She suggests these crypto pronouncements kind of signal a softer touch on enforcement in some areas. She actually calls it regulation by non-enforcement, which, it basically means by not acting in certain crypto situations.
They're setting a standard anyway.
Exactly. They're implicitly creating an expectation, or maybe a lack of one. What do you make of that idea? Regulating by not enforcement?
Well, it sounds like she thinks it's damaging the SEC's reputation, in the long run. If they look inconsistent, she's worried their arguments in court won't hold up as well.
Yeah.
And it could even muddy the waters around existing case law. That seems like a pretty significant worry from inside the agency itself.
It absolutely is. She's looking at the potential knock-on effects for the SEC's power to regulate all financial markets effectively. And she points directly to things like, remember the FTX collapse in 2022?
Oh, yeah, huge.
As a stark example of the kind of major risks that can blow up in the crypto world. Her point is, maybe the immediate clamor for regulation has died down a bit, but the underlying dangers, they haven't vanished.
Then her big concern looking ahead is crypto getting more tangled up with traditional finance.
Yeah.
If these risks aren't dealt with now, proactively, she's afraid we'll just end up repeating those hard lessons, but maybe on an even bigger stage later.
Yeah.
It's a very careful, forward-looking view, all about keeping markets stable through consistent rules.
Absolutely. But, and this is key, that view isn't universal among the commissioners. Not at all. In fact, the Republican commissioners, they've laid out a pretty different vision for how the SEC should handle crypto.
Right. Okay, so let's pivot to their side. You've got former chair Paul Atkins looking back and saying, crypto markets have been languishing in SEC limbo for years. His worry seems to be that too much regulation or maybe unclear regulation could actually choke off innovation here.
Yeah, it's a totally different starting point from Crenshaw's stability focus. Atkins is looking at the potential for growth, for development in crypto, and he's worried that being too strict or just vague could kill that potential. And then there's Commissioner Hester Peirce. She's been quite outspoken about needing a more crypto-specific approach for a while now.
And her main argument, it seems, is that a lot of crypto stuff just doesn't really fit the old definition of a security. So forcing it into existing securities laws might just be the wrong tool for, as she puts it, most currently existing crypto assets. That directly challenges the whole premise that the current framework fits.
And what's really interesting there is her point about evolution. She argues that even if some assets started looking like securities when they were first offered,
they might not be anymore.
Right. They've changed. She calls them functional. Now maybe they're used for payments or in apps, not just held as investments. Which brings up a huge question, doesn't it? How should rules adapt when the thing itself changes its fundamental nature over time?
Yeah, that's tricky. And then Commissioner Mark Uyeda adds another layer. He says the SEC should undertake efforts to provide assurances that regulation by enforcement will not be a tool used for future policymaking.
Okay, so less figuring it out through lawsuits after the fact.
It sounds like, yeah, the Republican commissioners together are pushing for more clarity up front. Give the industry the rules of the road. Don't just define them by penalizing people later.
That's a really key difference in approach. They seem to want more proactive guidance, maybe clearer definitions, so the crypto world knows where it stands. So you line these viewpoints up.
Yeah.
Crenshaw on one side, Atkins, Peirce, Uyeda on the other, and you see this fundamental clash over the SEC's actual job regarding this technology.
Totally. You've got Crenshaw saying, apply the existing rules, be consistent, protect investors, keep markets stable.
Right.
And then you have the Republican commissioner saying, hang on, maybe these rules don't fit, let's be flexible, let's prioritize innovation.
And they see very different dangers down the road. Crenshaw fears market chaos, loss of trust in the SEC if they're inconsistent.
While the others worry about, well, killing a promising new industry or driving it overseas.
Exactly.
So for you listening, this whole internal SEC debate really matters. How this basic disagreement gets resolved, or if it gets resolved, that's likely going to steer the course for crypto in the U.S. Are we heading towards clearer rules that maybe help innovation and protect people?
Or does the uncertainty just continue, maybe holding things back and leaving risks unaddressed? It really underscores just how hard it is to fit a fast-moving technology into legal boxes that were built, decades ago. This lack of a single vision at the top regulator, it creates both problems and maybe opportunities for the crypto industry.
Okay, so let's try to wrap this up. We've clearly seen this major split within the SEC on handling crypto. Commissioner Crenshaw pushing for caution, consistent enforcement, warning about instability if rules get bent for crypto.
Yeah, the Jenga warning.
Exactly. And on the flip side, the Republican commissioners pushing for a lighter touch, focusing on innovation, and really questioning if securities laws are even the right framework for a lot of crypto assets.
And it's fascinating because this internal SEC debate, it's like a microcosm of the bigger global discussion, isn't it? How do you regulate this stuff effectively?
Right.
There really aren't any simple answers here, and whatever choices get made now, well, they'll echo for a long time in finance and tech.
Which brings us to a final thought really for you to chew on. Given these clashing perspectives inside the SEC and just how fast crypto keeps changing, what do you think the right balance looks like? How do you build a regulatory system that actually helps innovation flourish, but also keeps markets stable and protects everyday users? It's definitely something worth considering as this whole regulatory Jenga game keeps going.